Markets are pretty convinced what Donald Trump's election victory means for the US, with the dollar index, with US equities, US Treasury yields all moving very fast. But what's going to happen in Europe, particularly with a lot of political risk coming down the line? Peter Schaffrik of RBC Capital Markets is here to discuss this. Peter,
hello,
there
Roger.
is a great deal going on or coming up over the next 9 months. We start with the Italian referendum. We finish pretty much with the German election in September. Which of these is the market's going to worry about?
Well, I think first of all, you nailed it. I think there's the political risk is what's currently on investors' minds. And I would stress that I think it's particularly the next sort of 6 months that are coming up that carry the biggest risks for markets. We've got the Italian referendum, we've got the Dutch general election, and we've got the French presidential elections where we just had sort of the primaries. And I think that is the thing that markets are worrying about, because in all these elections you've got sort of a negative EU vibe as an undertone. I think the German general elections, frankly, is quite a different kettle of fish. We can talk about that together.
But the one really coming up is Italy, and that's probably where the market is starting to price in some action over this. Explain what this first chart is.
Well, what you see here is just very simple. It's the yield difference between the 10-year Italian and the 10-year German yield. And what you see is we have been at round about these 200 basis points levels sort of in the 2010 period, just before these spreads really started to explode. Obviously, the absolute yield levels are different. We're significantly lower. It's in good part due to the ECB policy, but the spread levels sort of give us a little bit of a warning sign here. We shouldn't be moving too much higher before I think the market will worry about it properly.
And the other big area where we're expecting to see movement is the euro dollar, which is our next chart, which is going to be volatile, but is starting to move now down even towards parity. That's going to be a big play over the next few months.
Well, it has been a big play already, but particularly when it comes to the currency, I would differentiate quite a lot between, on the one hand, sort of the monetary policy angle that comes in. We've seen quite a big increase in Fed expectations most recently, and inflation expectations coming out of the US, and that has been driving the dollar higher. And I think there's a different type of euro weakness that we've seen before in 2011 and 2012 that's not yet really in play. But going back to the Italian question we had just had before, if some of these risks were to materialize, that could push that significantly lower. I don't think we're there yet, but it's obviously a risk.
And it also could push euro sterling quite a bit as well. I mean, from the Brexit point of view, actually, is it now time for the market to worry less about Brexit, more about European political risk?
Well, as I was just saying, I think it's definitely time to sort of look at these things, because we've got big political events coming up, and some of it probably is in the price. But I think particularly when it comes to sterling, we have to sort of see both sides, because obviously sterling has been taking a quite significant hit following the Brexit. That's a political risk in itself, and we know going into 2017 there will be sort of new information. There's most likely going to be new information coming up that might or might not be sterling negative as well. So I think that really is sort of a more balanced risk, and we'll have to see how it pans out.
And just finally, Peter, the economic backdrop for Europe, our final chart, is clearly that we are going to see this widening gap between how the US is progressing and where Europe is. What is the state of play with the European growth?
Yeah. We're already in that yield difference between the US and the euro, or what we have here is the German Bund. Typically speaking, what you had is in all the previous decades is when the US was doing well, sooner or later the European economies would be doing well too. However, this time we've got quite a lot of homemade problems, Brexit, political risks, generally speaking, not a lot of growth going on, that are sort of holding us back. And going into 2017, we think, particularly in the first half of the year, they're going to hold us back even more. And against that backdrop, I think the US is probably going to grow quite well, and the yield spreads are most likely going to widen even further.
Okay, Peter, thank you very much indeed.
Thank you for having me.